Good afternoon. I'm Dryden Pence. It's April the 28th at 3:40 in the afternoon Pacific time. This is the sixth in our series of economic and coronavirus updates of how it's affecting the economy and the markets. So hopefully you've seen some of the ones that I've done in the past. If not, this will give you a quick update and context for what we see happening with the virus, the response to the virus, the economy, the markets, and then the recovery. Now, as I've said before, the most important number is not how many people get sick, but how quickly those who are sick get well. Remember, this is a period of about 14 to 16 days. And that's an important number because it affects the overall battle rhythm, if you will, of how our country and indeed the world deals with this. So those are the two big questions. How quickly those who are sick get well. And then now what you're seeing is a big question, is how many days until we open the economy back up? So we'll deal with that a little bit now. The important thing to remember is that the period of endurance with this virus is about 60 to 90 days, and I'll show you some data around that. Remember, a month or two ago, we really did not have a lot of information. This was brand new. Well, now we have about 3 million data points of people that have been affected by this virus. So we know a lot more now than we did 60 days ago. But the point remains, is the period of endurance, the period that this is really going to affect things. It runs about 60 to 90 days. And that's important. Because when you think about the United States, you realize that, well, we're in about day 47 since we declared a national emergency. So quite frankly, we're halfway through this. And that's important. Because what you're seeing happen is you have people are beginning to kind of come out of their shell, try to break out of their cocoon, move around a little bit. States are beginning to open up. So we slowed everything down tremendously, and now we're beginning to see moments of emergence from this crisis that we have had. So remember, if it's a 60 to 90 day event, maybe a little bit longer here in the United States, but we're already at day 47. That's important. Now, if we look at the global COVID pandemic, you can recognize there's a couple of important lines on this chart. Okay, unfortunately, the red line is the number of people who have succumbed to the virus. But then the green line is the number of people that have had it and are actively getting released or getting well. The blue line is the number of active cases. And what you really want to see is over time, this moment where the green line and the blue line cross over. Now, this is the global number, but let's break this down a little bit. You see, at the United States, we also took this line item and we set it on a time series, starting on the first day where a country ended up with 100 cases. So you can look at all the various countries, the U.S., you can see China. China is almost at day 100 already, so they're kind of all the way through this. And indeed, they're opening back up and getting back on track. Korea is much further along. And then you have Italy, Spain, Germany. We'll get more into details of those later. But then you can see the United States, a much bigger effect. Well, there's a couple of reasons. Remember, the first one is the United States is a very large country. Secondly, it's big, so it occurs at different stages and times across the country. And third, the vast majority of cases are in New York City. Over a third of the cases are in New York City. And New York City has a rare distinction of being very densely populated. You see, that's why there's a peak there. Because in New York City, the population is about 10,000 people per square kilometer. Well, although China is densely populated, in the city of Wuhan, where most of the cases were, their population density is only about 1,200 people per square kilometer. New York is almost 10 times that. And then in Korea, this didn't happen in Seoul so much as it happened in Daegu. And that area, again, you had lower population density. So that's one reason why you see that big spike in number of cases in New York. So as we think about time and we think about number of days, we think about population density, we can begin to see very key patterns in this going forward. Let's look. China is at day 98. They're already on the other side of this to a great extent. As you can see, more people have recovered. They've hit that crossover point where the green line and the blue line cross. More people have recovered than are getting sick. And now they're moving to open back up their economy. That's the second largest economy in the world. That's a very important distinction. Now, when you take a look at South Korea, they're kind of next in line. They're at day 68. Exact same trend, and you can see that as it goes. The virus is the virus is the virus, and it works through an economy and works through a nation in a very predictable pattern. It's kind of interesting. Right now, the virus is somewhat more predictable than the markets. And when you move now, you can see Iran is at day 62. They've been able to kind of get control of the circumstances there. Then you can take a look at Germany at day 58. Germany has a very, very strong healthcare system, and so they've been able to hit a recovery on this quite well, and they've handled it quite well for an industrialized nation in Europe. And so you can see how Germany has fared, and they're at day 58. When you look at Spain in day 56, they've hit the crossover point as well. So you're seeing these things happen at about day 50, between day 50 and 60 for these countries. You can look at Italy, day 65. Now, Italy is a little bit longer in scale here. It's had a bigger outbreak. We all remember those headlines. But you can see that the trend is moving pretty much as one would predict. It's just taking a little bit longer. And we think that that's probably going to see more like the case in France as well at day 58. And then at the United States, we're at day 55. And we still have a long way to go, but it's very encouraging. And what I want you to notice is the green line down there at the bottom. You're beginning to see it tick up a little bit. And remember, early on, the vast majority of the cases were in New York, and as that peaks, it begins to move to other parts of the country. So although the United States is just now maybe beginning to hit peak virus as a nation, it looks like that probably as we get more testing, and now we've got testing up to around 200,000 tests a day. That's a big number, and it continues. We're beginning to find out more and more about this as it moves across the country. But you're actually able to see the trend in New York, the largest outbreak that we had. Begin to recognize that we're past the peak there. We're beginning to see the number of active cases come from testing stuff go down a little bit. So it's a favorable trend. And you can see the number of deaths are beginning to level off and move the other way. And then you see those spikes in the numbers here. That has to do with weekend reporting. But in general, we're seeing a favorable trend in New York, and that's going to begin to echo through the numbers in the United States. Now, what's important to remember is that as testing capacity has increased, the percentage of new positive tests has slowed, and that's important. And the conversation has now begun to move from how bad is this going to get to when does it get better? And then now it's moving to when do we open up? This is very significant. We're kind of like we're all emotionally beginning to get on the other side of this, and that's very important for our economy and for our nation as a whole. Again, we're at day 47 of what's pretty much a 90-day event. We're halfway through, and that's important. So how long does this affect the U.S. economy? You see, the virus itself isn't what has affected our economy. It's the reaction to the virus. It's our policy around trying to slow the spread of the virus, to lower the curve. That's what's been important. So we had this artificial government-induced slowdown, and that's affected our economy kind of like a sudden stop, really hard and really fast, and it's been difficult. But then we have also had policy that's come in to help that. So when we answer this question about how long does it affect the economy, we have to look at a couple of things. We're going to have two bad quarters. Now, we're going to get information on the first quarter GDP numbers here in the next day or so. And that's anticipated to be kind of bad. Our economy was zooming along really strong, but then we had the last month of the first quarter, and boy, things slowed down really quickly. And then now we have the first month of the second quarter, and it's been severely constricted. So what we see now is we're in for two bad quarters, but on top of that, we have tons of U.S. stimulus from the Federal Reserve, and I've already talked about this before, and also from the CARES Act and fiscal policy. So we dropped $2.1 trillion already. into the economy from fiscal policy, plus a couple trillion, almost $4 trillion available from the Fed. That's a lot. And you have to remember, it's a $21 trillion economy in the United States. So we've actually kind of inserted about 10% on top of that. That's a lot of stimulus. And now we've hit the next phase where additional stimulus is being added. So here's the important thing to recognize is that the stimulus is probably going to be staying around in our economy. Its ripple effects and continued and multiplier effects is going to go into our economy and be around actually longer than the virus itself. And that's a good thing for the future. It's important to know. You see, we're going to have a variable speed recovery. Parts of our country are going to open up and grow and get back on track at different speeds. Different states are going to open up and do different things. And so it's not going to be uniform across the nation, and it's not going to be uniform across the world. But it's going to get us back on track, and that's important to pay attention to. So we'll have the removal of lockdowns is going to come. It's now kind of pretty much up to governors to do that. And so we already see 15 states plan to have some form of opening by May the 1st. Some never really locked down completely, some had less, and then you have a few big states that are looking to open May the 1st, and that's really, really important. So, as I said, this is a progression across the nation. You can see how the virus has affected New York and New Jersey, and then you can see California and Texas, how they've affected. And the big one to pay attention to here, I think, is Texas. And this gets into a question about personalities and individuals and fear versus aspiration. You see, as human beings, we really have these kind of two competing emotions. One is fear, right? And the other is aspiration. And in general, aspiration always beats fear. If it hadn't, over time, we never would have progressed as a society. We never would have ever gotten out of the cave. So the important thing is aspiration generally overcomes fear. And because of that, we can look at a variety of states that are getting better. And I want you to pay close attention to Texas. The reason why is people forget how big Texas is. And the Texas governor is talking about opening that state up the 1st of May, just a few days from now. And how the revival in Texas and the recovery in Texas goes will be a very, very important trend for the entire nation. And that's going to be a good thing. People forget how big Texas is. The economy of Texas at $1.8 trillion is bigger than the entire country of Canada. It'd be roughly the 10th largest economy in the world. And so as you see that, plus 14 other states beginning to open up, you're going to see the U.S. economy begin to pull out of this. And that's going to be an important trend for us to watch and be very, very careful about. Now, when we recognize that, we can also look at the rest of the world. The major economies of the world. I've already talked about us putting in a tremendous amount of stimulus. Well, if you take a look at the rest of the economies of the world, they're actually putting a lot of stimulus in the system as well. And so this is important. So when you see the IMF looking at contraction of world GDP, now lots of stimulus is coming into the system. And what's unique about this is the first time in a long time we've had what I would call simultaneous stimulus. Now, it's not synchronized, but it is simultaneous, so that you'll have pretty much all the areas of the globe stimulating at the same time. And that's very powerful for the recovery that we see. So you can see all of these countries working together to put a ton of fiscal stimulus into the global economy. And it's equivalent of throwing about 7.4% of world GDP into it. And so the IMF thinks that we're going to have kind of a deep, quick recession in 2020, but then, and this is on a global basis, not necessarily the U.S., but a deep global basis in 2020, but then a very rapid recovery thereafter. So kind of the whole world is looking at this as sharp and quick and deep, followed by a very significant rebound, and that's important. So when we recognize that we have had this slowdown, and now we have a ton of stimulus, plus a recovery is coming along, what does that do for market volatility? Let's look at some data. You see, for the S&P 500, between 2015 and 2020, we've had multiple periods of times where you've had these rapid market sell-offs, albeit none as severe as we just had. But you see, there are patterns where you have a rapid sell-off followed by a recovery. And this is, we had this tremendous drop. We had the market drop 18 days. In 18 days, it dropped roughly 30% from its peak. But since then, it's recovered dramatically, right? It's recovered, and as it's recovered, what's happened is we've kind of bounced off of that. We're up like about 28% from the bottom. You see, this pattern that we see is the average peak of a market to a trough during this 5-year period of time. It's been about 25 days. And the average trough to recovery has been about 62 days. Well, how does what we just went through, this momentous event, how's that stack up? Well, what we've seen is we went down over a period of about 18 days. And we're now moving back. We've kind of come up over the last 26 or 28 business days. Now we've moved back up about 28%. We're nowhere back near the peak. We've got a little ways to go. And the market's still down for the year. But you can see we've kind of bounced off the lows and we're finding a range. Now, the market's going to continue to be volatile. It's going to continue to be volatile. It's not clear sailing. We're not quite sure exactly how rapidly everything's going to go. But what I want you to pay attention to is that we're now in this moment where the bounce off the bottom has occurred. And we're thinking about how do we move forward now? So it's important on an individual stock selection basis to look at the companies that are going to weather this the best and move forward from here. So tons of stimulus into a market, going to continue to have volatility, but it's important to look at the overall trends. And we think that those tend to be positive. Will there be a moment where we could maybe retest the lows? Could we have bad news that creates some volatility? Yes. But as we look at what's going on now, we can be constructive towards the future. We're kind of moving past the worst of it. So what? Well, all of this information kind of gives us a couple of big themes to pay attention to. The first one is that April has probably seen the peak in New York. And we thought the crossover point might come right around the end of the month, but it looks like that's going to be elongated a little bit. So the crossover point will be sometime in May, where you see more people in New York getting well than getting sick. And those things are kind of what happen fast. States are beginning to open up. Like I said, we've got, by the time you get to May 1, we're going to have about 15 states and a big chunk of our economy beginning to open up. And that's important. It's going to be a variable speed recovery, both from the economy and the virus. Some sectors, some areas, some things are going to move faster than others. So it's going to be interesting to see how this opens back up, but we are in the process. Now, U.S. fiscal and monetary policy are all in, and they're doing everything that they can. We've seen the Fed is standing there ready to help as necessary. They've already put a lot of stimulus in, and the federal government through legislation has gone through several rounds of stimulus, and they continue to be convinced to move forward. And these programs are being effective. And the thing to recognize about this is that the stimulus that's being poured into this economy is going to last longer and have multiplier effects longer than the 90 days that we think that we're going to be heavily constricted by the virus. And then you have global simultaneous stimulus of about $6.4 trillion. That's a positive effect. So we get through this. The important is we get to the other side. Now, the coronavirus headlines are going to be less bad. We're already seeing that. But unemployment headlines will be horrible. And that's going to be a tough couple of weeks here when we look at how many people are unemployed. But then we're going to be able to see the other side of that, how many people will be going back to work. So the debate is now shifting from how bad does it get to when do we open. And that's a positive move. So the important thing to recognize is that if your investment time horizon is more than 1 year, then staying engaged is valuable and you'll be rewarded. We don't know exactly what the future is going to hold. We don't know exactly how this is all going to work out. But we can begin to see continued growth, continued return, continued recovery, continue to open up. So we're moving towards, as I said, we're in day 47 of a 90-day cycle. So we're more than halfway through it. And that's an important thing to pay attention to. Now, I've talked to you about the virus, and I've talked to you about our response to the virus. I've talked to you about our economy and how it's beginning to open back up, and that's very important. I've talked about the markets and how they react to this volatility and how we kind of bounced off a bottom and we're trying to find a mid-range here. And people are beginning to be optimistic about how this all happens. It's a timing issue at this point. And then I've talked about the recovery. Not just the recovery from the virus, but the recovery of the economy and how it's going to be variable speed across the United States and across the world. I hope this information has been helpful. I hope that you stay safe, that you follow the leaders of your various states and parts of the country, but that you recognize that we are on the road to recovery, and that's important. So thank you for your time. I hope this has been informative, and I'll see you again in the not too distant future. Thank you very much.